Hi, Facebook family. Allow me to reintroduce myself. My name is Claudia DeBlanc, and I recently partnered with United Credit Education Services as a credit consultant. As a credit consultant, one of the most important things that I do is help people to fix their credit. I also provide financial literacy education and assist people to live the lives that they dream of. I also provide financial literacy education. Now, I'll be the first to admit that I wasn't taught financial education coming up. And like millions of others, I have too lived beneath my privilege. Let me share some financial education with you. Do you ever wonder what exactly goes into your credit score? There are 5 main categories. Here, let me outline them for you. First, there's your payment history, which determines a whopping 35% of your credit score. This calculation is based on how you pay your bills. So remember that paying your bills on time is key. Next, it looks at how much you owe. This determines approximately 30% of your credit score. And 3 categories are evaluated. First, the amount you owe to all of your creditors. Second, how many accounts you have with balances, because remember, too many accounts could indicate a credit risk. Third, how much of the credit limit you are using on revolving accounts. Keeping in mind that using under 30 to 35% of your available credit is ideal. Balances on installment loans. Remember that low balances reflect a positive payment history. Then there's your length of credit history. Approximately 15% of your credit score is calculated by your length of credit history. It looks at how long your accounts have been open and the length of time since last activity was on your account. Always remember that a long credit history will maximize your credit score, so you don't want to go cutting up your credit cards. But a short credit history with responsible credit use is fine. Number 4 is inquiries or new credit accounts, which accounts for 10% of your credit score. This category weighs the amount of inquiries for new credit over the period of time that it occurred. So it mainly checks to see if you're overextending yourself. And last is your mix of credit, which is 10% of your credit score. It is derived from the type of credit you've managed on your credit report. So ideally, a mortgage loan, a car loan, and credit cards, all reflecting positive payment histories, will show that you're using different types of credit responsibly. So with that being said, I am inviting you to a powerful event that will be held at 9 p.m. link for tonight's overview. I'm looking forward to some wonderful things happening in my life. And there are countless stories of folks who are moving into dream homes, able to get the credit that they've always wanted, removing medical claims that have been on their credit reports for years within a matter of months. I'm telling you, some exciting things are happening, and I look forward to seeing you tonight. Remember to type info in the comments. I'll see you soon.